Welcome back to the channel. Today's video is a big one. We're talking about something that could drive the next $2 trillion in tech growth. According to Dan Ives, the global head of tech research at 𝗗𝗟𝗏, AI is about to spark the biggest wave of innovation and investment we've seen in years. He says, and I quote, AI will drive the next $2 trillion in tech growth. He also made a bold claim about Tesla, that its earnings mark the beginning of the company's AI future. That's huge, and if you're watching the markets closely, you'll want to hear what he said. So here's what we're doing in this video. First, I'll show you a short clip of Dan Ives on CNBC's Closing Bell, where he breaks it all down. Then, I'll give you my own reaction and deep dive analysis, breaking down what his comments really mean for investors like us. And finally, I'll share one unstoppable AI stock that I believe is worth buying now and holding long term. This artificial intelligence stock will likely join Nvidia, Microsoft, Apple, Amazon, and Alphabet in the $2 trillion club by year's end. Trust me, if you only watch one video today, make it this one, and stick around till the end. If you're serious about investing in the future of tech and AI, this is for you. Before we get into it, do me a quick favor, hit that like button. Let's try to get this video to 1,000 likes. Share it with someone who needs to hear this. Subscribe if you haven't already, and turn on notifications so you never miss a big financial update. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Alright, let's jump into it. Here's what Dan Ives had to say.
Let's bring in star analyst Dan Ives of 𝗗𝗟𝗏 and Jason Snipe of Odyssey Capital Advisors. Jason is CNBC contributor, of course. And it's great to have you both with us. Dan Ives, to you first. Are you optimistic?
I mean, look, we're very bullish in terms of what you're going to see tonight. I think Tesla's really around AI, robotaxi. Really, it's the start of the AI future for Musk and Tesla. And I think this, and I've talked about it, it's going to be worth $1 trillion alone to the valuation of Tesla.
So, you didn't even address Alphabet. Does that mean you're less excited about that? Even as you say, there's an attractive setup for it. I think the market kind of questions, is it really? Is it really an attractive setup?
I think Alphabet, in my opinion, from a large cap perspective, it's one of the most, probably the best risk-reward names out there because our view, I get the DOJ issues and the worry that AI is going to cannibalize search. We upped our digital advertising growth numbers, our YouTube numbers, we think it's strong. I think this is when the street's underestimating growth, and there's probably $40, $50 overhang right now between AI and DOJ. That's why we still think there's a table pounder here.
I know, but why are you raising, why do you feel so compelled to raise your search estimates for not only the quarter but the full year? Why don't you need to see more proof before you start doing stuff like that?
It's a great question. I mean, but our reputation has been built on the work that we do during the quarter. And everything we see from a digital advertising perspective has been bullish, not just for Alphabet, but for Meta as well. And that's why I think what we're seeing now, this golden age for tech, is all starting to take shape. The next stages of AI, and I think what you're going to see throughout earnings season the next 2-3 weeks, is that it's a big step, I believe, forward for big tech.
Why does the golden age for tech have to be a golden age for all? Some are going to shine brighter than many of the others. There's a question as to whether this one is going to shine as brightly as a Meta or an Nvidia or an Amazon.
Yeah, I think right now you have a separation, right? I mean, of course, you have Nvidia, you have Microsoft, you have Meta. On this side, you have Apple, Tesla, and I'd say right now Alphabet's kind of in between. It's a prove-it quarter for Alphabet. I think it's a prove-it quarter for Amazon. But our view is that when you think about the second, third, fourth derivatives of AI, and the $2 trillion that's going to be spent in the next 3 years, Street's still underestimating it, which is why I believe tech stocks are up another 10, 12% the rest of the year. And I believe we're going to be talking in the next 12, 18 months about NASDAQ 25,000.
So, Jason Snipe, you just heard him. It's a table pounder going into the print. You agree?
So this is what I would say, Scott. A couple things. One, Google has run up a lot into the print. It's up 31% since the tariff delay April 8th. It's flat on the year, but it's moved a lot since the delay, clearly. I think my focus really is on search. I'm a little bit less bullish because I think the chat bots and all the rising competition in kind of the answer key spectrum is obviously giving me some concern on what search will look like. Clearly, the 𝗣𝗟𝗑 event, we've moved since that. That was 2 months ago when there was discussion about, hey, this is the first time in 20 years that an Apple product, that there's been some decrease in search in Apple products in 20 years. So I think Google has passed a lot of these hurdles and some of these headlines. But for me, it's definitely about search. It's definitely about Google Cloud. We're expecting 26% upside there. We're expecting about 11% revenue growth and 16% earnings growth. So, I think it's a show me quarter. I agree with Dan from that perspective. But I'm a little bit less bullish going into this print for Google here.
So, Dan, the stock's up 25% since the so-called 𝗣𝗟𝗑 sell-off. Did the market overdo it? Is it just a rebound that was caught up in the momentum of the whole trade of Mag 7 and AI? Are we going to get some real answers tonight from the company?
Yeah, I think the biggest thing here is the view that AI, it really means the end of the search business for Google. And I think the reality is that Google is going to be a huge participant when it comes to AI. And we talk about it not just on GCP, but when it comes on the consumer side and even on autonomous. And I think what you're going to see tonight is a management team more on the offensive than defensive. Now, clearly, DOJ and other regulatory issues. But I get what Snipe's saying. He brings up great points. But in my view, when you think about DOJ and you think about the regulatory and you think about just the worries about AI, the upside downside here is significant in terms of what I view as bullish.
So let's start with the opening shot of this interview. Dan Ives came out swinging. Before the host even finished the question, Dan made it clear. He's very bullish going into earnings, particularly for Tesla. He didn't hedge, didn't hold back. For him, this earnings report isn't just another quarterly update. It's the beginning of a new era for Tesla. He goes straight into what he calls the robotaxi revolution, suggesting that this development alone could be worth $1 trillion in valuation for Tesla. $1 trillion, with a T. That's how significant he believes the role of AI will be in transforming Tesla from a car company to a full-on tech giant with autonomous mobility at the core. And notice something interesting. When asked about Alphabet, aka Google, Dan completely skips it at first. That pause, that hesitation, it's telling. It almost felt like Tesla is the main event in his eyes, and Alphabet is playing catch-up. But then, he does circle back, and that's when we get into the more nuanced take. Dan calls Alphabet one of the best risk-reward setups among large-cap stocks. Now, he acknowledges the elephant in the room. The Department of Justice investigations and concerns that AI might cannibalize Google's core business, search. But despite all that, he's still raising his digital advertising and YouTube growth estimates. Why? Because his team has seen strong signals during the quarter, not just after the fact. He says what they're seeing in digital ad momentum isn't just good for Alphabet, it's good for Meta too. And that, to him, is proof that we're in the early innings of what he calls a golden age for tech. And here's where it gets really interesting. Dan doesn't just say this is a great time for tech broadly. He starts talking AI spending on a whole new level. He throws out this projection, $2 trillion in AI-related investment over the next 3 years. That number alone is staggering. And he says Wall Street still underestimates just how much value this new wave of AI is going to generate. He even drops a bold prediction. He sees tech stocks rising another 10-12% by the end of this year, and the Nasdaq hitting 25,000 within 12 to 18 months. Now pause for a second. That's not a modest outlook. That's aggressive optimism, especially given some of the macroeconomic headwinds out there. But Dan's thesis is clear. AI is the catalyst, and big tech is the biggest beneficiary. Let's talk about Alphabet again, because this is where things get really split. Jason Snipe from Odyssey Capital comes in with a more cautious view. He's not necessarily bearish, but he's not as gung-ho as Dan. And here's why. Jason points out that Alphabet has already rallied 31% since early April, following what's been dubbed the 𝗣𝗟𝗑 sell-off. That was the moment Apple announced a rare decline in search engine usage, the first time in 20 years, and that spooked a lot of investors. Jason's main concern is around search. With chatbots, LLMs, and AI assistants like ChatGPT and Claude growing in popularity, he sees a legitimate threat to the traditional Google search model. He also highlights growing competition in the answer key space, meaning users are getting what they need from AI tools before ever hitting a search engine. He says it's a show-me quarter for Google, meaning investors need real proof this company can still lead in AI, grow cloud, and keep search relevant. But he does concede there's upside. Jason's expecting 26% upside in Google Cloud, 11% in revenue growth, and 16% in earnings. So he's not dismissing Alphabet. He's just not ready to call it a table pounder like Dan is. Back to Tesla. Dan sees this as the beginning of something massive. He positions the robotaxi announcement as the AI breakthrough moment for Elon Musk. Not just another product line, but a structural shift in the company's valuation. And that's important. Because Dan's not talking about cars anymore. He's talking about autonomous tech, consumer AI, and Tesla's position as a global leader in this next frontier. He says the management team at Alphabet, and likely Tesla too, is going to come out offensively, not defensively. That means we'll hear bold strategies, big visions, and direct responses to recent criticisms. And when it comes to regulation, the DOJ, antitrust concerns, all that, Dan acknowledges it, but he downplays it. To him, the upside in AI and cloud is much bigger than the downside of litigation or political pressure. So here's the big takeaway from Dan Ives' interview. He's ultra bullish on Tesla, calling the robotaxi a trillion-dollar opportunity. He's very optimistic about Alphabet, even with DOJ heat and search competition. He believes we're entering a new golden age of tech, led by AI. And he thinks the market still doesn't fully grasp how big this AI wave is going to be, predicting a NASDAQ at 25,000 in under 2 years. But here's the thing, not everyone agrees. Jason Snipe's more cautious tone serves as a reminder that while AI might be the future, not every company will benefit equally. The market has already priced in a lot of optimism, and now these companies need to deliver. If you're an investor, the big question is this: do you believe AI is about to supercharge the market, or do you think some of these tech stocks have already run too far too fast? Let me know what you think in the comments. Are you Team Dan Ives or Team Jason Snipe? Don't forget to hit like and subscribe if you want more breakdowns like this one. Now let's dive into the one. Today's focus is Meta Platforms, ticker symbol Meta, parent of Facebook, Instagram, and WhatsApp. Known for dominating digital advertising, Meta is now transforming into an AI powerhouse. CEO Mark Zuckerberg's five-pronged AI strategy is reshaping the entire Meta ecosystem. This isn't a collection of experiments, it's an integrated plan, where each AI initiative amplifies the others. With billions of users and unmatched data, Meta has a unique advantage in training and deploying AI at scale. Its rapid feedback loop accelerates innovation far beyond smaller competitors. Meta is more than a social media giant. It's poised to join the ranks of multi-trillion-dollar companies. The market is starting to notice, but the full impact is still underestimated. Let's dive into the first pillar, supercharging Meta's advertising business with AI. Meta's first AI pillar is transforming its advertising platform, the company's economic engine. Generative AI now empowers marketers to create high-quality ads with just a few prompts, making professional advertising accessible to all. These tools enable massive-scale A/B testing, helping businesses quickly find what resonates with their audience. The result: higher returns for advertisers and a virtuous cycle of growth for Meta. The vision? Fully autonomous AI agents that run entire ad campaigns, expanding Meta's advertiser base dramatically. This isn't just an upgrade, it's a fundamental reimagining of digital marketing, fueling Meta's next phase of growth. These profits fund Meta's most ambitious AI projects, which we'll explore next. The second pillar, using AI to create more engaging experiences across Meta's apps. AI-powered recommendation engines on Facebook and Instagram keep users hooked, driving more ad opportunities. Generative AI tools empower creators to produce unique content, ensuring a steady stream of fresh material. This strengthens Meta's creator economy and keeps the platforms culturally relevant. The third pillar, business messaging. AI agents are automating customer service and sales on WhatsApp and Messenger. Businesses can now offer 24/7 support at a fraction of the cost, making these platforms indispensable. This is quickly becoming a multi-billion-dollar opportunity, diversifying Meta's revenue beyond ads. By enabling seamless commerce and communication, Meta is building a new, highly profitable business line, all powered by scalable, efficient AI. The fourth pillar is Meta AI, a standalone chatbot integrated into WhatsApp, Messenger, and Instagram. Instantly, billions have access to Meta's AI assistant, giving it unmatched reach. Meta AI helps users with everything from answering questions to generating images and code. Over time, this could become a major source of ad revenue or even a premium service. Meta's advantage: it leverages the same AI infrastructure across products, keeping costs low and features competitive. This efficiency allows Meta to scale its AI assistant rapidly. As usage grows, Meta AI becomes a valuable digital gateway. The company's unified AI approach spreads R&D costs and strengthens every part of its ecosystem. Next, let's look at Meta's boldest bet AI-powered devices. The fifth pillar, AI-powered hardware, starting with Ray-Ban Meta smart glasses. These aren't just cameras, they're early vessels for Meta AI, bringing intelligence into daily life. Sales are surging, signaling real demand for wearable AI. Zuckerberg envisions AR devices controlled by natural language, with AI understanding your environment. Imagine instant information about anything you see, powered by Meta's advanced AI models. By building its own devices, Meta aims to control the tech stack and reduce reliance on Apple or Google. Owning the next computing platform would give Meta a durable competitive moat. Each pillar reinforces the others, creating a self-reinforcing ecosystem. This is why Meta stands out as an unstoppable AI stock. Meta's strategy is underpinned by a formidable financial foundation, one that not only supports its current operations but also empowers bold moves into the future. The company's massive profits and consistent cash flow are the lifeblood fueling its ambitious push into artificial intelligence and next-generation technologies. This financial strength isn't just a safety net, it's a launchpad for innovation, allowing Meta to take calculated risks that many competitors simply can't afford. In recent quarters, Meta has reported impressive revenue and profit growth, even as it pours billions into research and development. This growth is a testament to the company's ability to balance aggressive investment with operational discipline. Despite the heavy spending on future technologies, Meta's core business remains highly profitable, demonstrating the resilience and adaptability of its business model. What's even more remarkable is that operating income is rising at a faster pace than revenue. This signals that Meta is not just growing, but becoming more efficient, largely thanks to the integration of AI across its platforms. These efficiency gains mean that every dollar earned goes further, amplifying the impact of Meta's investments. This robust profitability gives Meta the freedom to fund ambitious projects like Reality Labs, which is focused on building the metaverse, as well as other long-term bets. Importantly, these investments are made without putting the core business at risk, ensuring that Meta can innovate aggressively while maintaining financial stability. Meta is also committed to rewarding its shareholders. The company has been buying back billions of dollars in stock, a move that not only returns value to investors, but also signals strong confidence in its own future. These buybacks, combined with a healthy balance sheet, make Meta an attractive proposition for long-term investors. With a staggering $70 billion in cash reserves, Meta is well-positioned to weather economic downturns, seize acquisition opportunities, and continue investing in breakthrough technologies. This war chest provides unmatched flexibility and security, allowing Meta to stay ahead of the curve in a rapidly evolving tech landscape. The company's market capitalization is now approaching $2 trillion, reflecting investor confidence and the scale of its operations. Despite this massive valuation, Meta trades at a reasonable multiple relative to its growth prospects, making it a standout in the tech sector. At its core, Meta's financial foundation is rock solid, a fortress built on innovation, efficiency, and strategic vision. This stability is what enables the company to pursue transformative ideas and shape the future of technology. With a forward-thinking AI strategy and a balance sheet that rivals the world's largest corporations, Meta stands out as a compelling long-term investment. Its ability to adapt, innovate, and deliver value positions it as a leader in the digital age. Next, let's explore how Meta's financial might and AI vision position it within the broader landscape of artificial intelligence. The world of artificial intelligence is evolving at a breathtaking pace, and Meta's journey through this landscape is nothing short of remarkable. As we witness the rise of AI, Meta stands shoulder to shoulder with industry titans like NVIDIA, Microsoft, and Alphabet, each carving out their own unique path in this technological revolution. NVIDIA, for instance, has become synonymous with cutting-edge AI hardware, powering the computational engines behind many breakthroughs. Microsoft and Alphabet, meanwhile, are pushing the boundaries in cloud computing and enterprise AI solutions. But Meta's strength lies elsewhere. Its expertise is in building AI-driven experiences that touch the lives of everyday people. With platforms like Facebook, Instagram, and WhatsApp, Meta maintains a direct relationship with billions of users worldwide. This unparalleled reach gives Meta a unique advantage, the ability to deploy and refine AI at a scale few can match, learning from real-world interactions every second of every day. Unlike its competitors who often focus on serving large enterprises or specialized industries, Meta weaves AI seamlessly into the fabric of daily digital life. Whether it's curating your social feed, powering smart messaging, or enhancing digital safety, Meta's AI is designed for the masses, making technology more accessible and intuitive for everyone. This approach creates a powerful data flywheel. Every new user interaction feeds Meta's AI systems, making them smarter and more responsive. As the AI improves, it attracts even more users, creating a self-reinforcing cycle of growth and innovation that's difficult for competitors to replicate. Meta's vision extends beyond social media. The company is pioneering new frontiers in virtual and augmented reality, smart home devices, and digital assistants, all powered by advanced AI. Rather than simply selling AI tools to businesses, Meta is transforming how consumers experience technology in their everyday lives. Meta Platforms is once again making headlines, not just for its massive $1.81 trillion market cap, or its impressive $62.36 billion in net income for 2024, but because of the growing momentum behind its strategic push into artificial intelligence. With an EPS of $26.32 and a price-to-earnings ratio sitting at 27.27, Meta continues to be one of the most closely watched names in big tech. All eyes are now on the upcoming Q2 earnings report, scheduled for July 30th, 2025. Expectations are high, with analysts predicting strong results, driven largely by increasing ad revenues and deeper AI integration across Meta's platforms. That combination of monetization and innovation is setting the stage for what could be another breakout quarter. A key piece of Meta's growth engine right now is its AI strategy. The company has been making bold moves to solidify its leadership in this space, most notably by hiring 𝗗𝗟𝗧 𝗟𝗦, one of the original co-creators of ChatGPT, as the chief scientist of Meta's new superintelligence labs. This high-profile addition signals Meta's serious commitment to developing cutting-edge AI tools that can shape everything from user experience to ad targeting to infrastructure. At the same time, Meta hasn't lost sight of its responsibilities as a platform. It recently rolled out new protections for teenage users on Instagram, including improved controls in direct messaging and enhanced scam detection features. These safety measures show Meta is responding to growing concerns around privacy and user welfare, especially for younger audiences. The sentiment from analysts is largely bullish. There's confidence that Meta's aggressive investments in AI are already starting to pay off, not just by improving back-end operations, but by increasing user engagement and making ad delivery more efficient and targeted. With Q2 earnings just around the corner and multiple catalysts in play, from AI innovation to public trust measures, investor interest is heating up. Many are watching closely to see if Meta can deliver another strong quarter and maintain its upward trajectory. For investors, this means that owning Meta stock isn't just another bet on AI, it's a way to capture a different consumer-centric side of the revolution. While other tech giants focus on infrastructure and enterprise, Meta's strategy is about shaping the future of how people connect, communicate, and interact with technology. At the heart of Meta's ambition is its five-pillar strategy, a comprehensive plan that guides its investments in AI, virtual reality, connectivity, and more. As Meta executes on this vision, its central role in the AI-powered future becomes increasingly clear and undeniable. With unmatched scale, a treasure trove of data, and a bold vision for the future, Meta is positioning itself as an unstoppable force in the new era of technology. The company's influence is set to grow as AI becomes ever more integrated into our daily routines. As the AI revolution accelerates, the question isn't just who will lead, but how you'll participate. Let's explore your next move in this rapidly changing landscape. We've explored Meta's five-pillar AI strategy and its financial might. Meta isn't just riding the AI wave, it's shaping it, with a clear path to a $2 trillion valuation and beyond. To spot companies like Meta early, you need strong investment principles. If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. Trust me, your future self will thank you. For deeper insights and community, check out our Patreon for bonus content and model portfolios. Now, I want to hear from you. Which non-obvious company do you think will win big in the AI revolution? Share your thoughts below. If you found value in this analysis, please like, share, and subscribe for more. Thanks for reading. See you in the next deep dive.